What is considered a good delta ratio? Have you ever wondered what makes a delta ratio good in options trading? Understanding this concept can help you manage your trades more effectively. The delta ratio is essential for traders, especially when using delta-neutral trading strategies. It helps in balancing risk and exposure in your portfolio. So, what exactly is the delta ratio? It is the proportion of options contracts to underlying shares needed to achieve a delta-neutral position. This means that the overall delta of your portfolio sums to zero, minimizing directional risk. Delta measures how much an option's price changes with a $1 move in the underlying stock. It ranges from -1 to +1. Call options have positive deltas, while put options have negative deltas. For example, if you have a call option with a delta of 0.25, the option price will increase about 25 cents for every $1 increase in the stock price. When you are trading in a delta-neutral manner, you calculate the delta ratio by dividing the total delta exposure of your options position by the delta of the underlying asset. Let's say you sold 8 call options, each with a delta of 0.25. Your position delta would be -2.0. To hedge this position and achieve delta neutrality, you would need to buy 2 shares of the underlying asset. This gives you a delta ratio of 2 shares for every 8 options. Now, what is considered a good delta ratio? It really depends on your trading goals. A good delta ratio closely matches the negative delta of your options position. This effectively neutralizes any directional exposure. For delta-neutral strategies, a ratio that keeps your overall delta near zero is ideal. The moneyness of the options also plays a role. At the money, options have deltas near 0.54 calls and -0.54 puts. For these options, a ratio of about 2 shares per option is common. Deep into money, options have deltas closer to +1 or -1, requiring fewer contracts to hedge. On the other hand, out-of-the-money options have lower deltas, which means you may need more contracts for effective hedging. Another important factor is that delta changes as the underlying price moves. This means that a good delta ratio is not fixed. It requires continuous adjustment to maintain neutrality. In practice, a delta ratio of 1:1 is typical for deep into money options. For at the money options, a ratio of about 2 shares per option is common. In summary, a good delta ratio effectively balances your portfolio's delta to near zero for delta-neutral strategies or aligns with your directional exposure goals. Understanding and applying the delta ratio helps you manage risk and optimize your trading strategies in options trading.